1 live on that opening bell. Look at this, Google. Look at that breakout. Look at that teeny action price made. Teeny up 1, teeny up 2, teeny up 3, teeny up 4 and 5. Comes back down here. Test that teeny action. Price action in that SMF platform. Bam! Right up to sliding that bid. Right here, sliding that bid on half bar short. Right then and there. And let's take a look and see if we can populate the historical data. And as it is populating right now, you can see all the diamonds that are coming in there. That's all of the MMT's data. They've been sliding that bid right in here. This bottom here got to a 3.6, but it failed. Now, the key is that these price action bottoms on a Friday have got, you know, because yesterday we got all the way, we were all the way up here when they slid the bid. And now we're buying down in here. And basically what we're going to do is if this thing here has got to hold that teeny action line. So this opening bell is different than the Google one or the Apple one. We're short, MMT shorted them up there on the high. It's all about when they fell, sliding the bid short right here. That's what it's about, MMTs. That meant that you weren't going to go up to that teeny, and that warranted a short. That also meant that everything inside of your platform, ratio adjusted, had stopped, and it would tell you when those numbers change, you go short. So right now, we can see what's going on here. And he's coming right down to this teeny line. He's very weak. And this should not say minus. So we're at 0. Now he just popped to 12. So it qualified as a market bottom because it did. And let's take a look here. We own these put options, and we're going to keep these. And we're also own these. And what we're going to do is find out which one of these areas peak out first. If this is going to be a big bounce here, then I should be looking at taking profits. But the thing about it is I can always trade the equity. That's 1 teeny, 2 teenies. That's a 1 teeny move up. Let's take a look. Oh, a teeny, 49 pennies. Oh, thy MMTs. This is truly price action. Let's see right here. This is price action. MMT. I've got that mini brain running up there. I can see how that bottom was qualified. My new MMTs, you hit 0. You popped immediately off that bottom there. And your intraday trend ratio low is 0.26. You're at 0.23. There's a little bit of improvement there, but not much. MMT. MMT. Here you are at price action on the opening bell on Google. And my new MMTs, he went back to 0. Look what happened. Boy, whoa, you got some big spikes in that indicator. 12 down to 0, 3 back up. And you're right here at that double teeny action line. So you started out there with the breakout. Bam. You're right back here. This is how moves get started, MMTs, and we're not seeing that currently right there. The minute that we see it, we'll be buying that. So let's keep our eyes on it. Here we are back to the Google trade. We're right down here at the very bottom here. And basically, we have not put a bottom in. We're going to put a bottom in this one. Once we do, once it puts its intraday morning bottom in, stock market's been open 18 minutes right now. And in the first 18 minutes, 3, 6, 9, 12, and that's a 15, and that's right to that teeny line. And basically, it's still at risk because each time it's tried to make a move, it was stampeded by overhead sellers, and that slide that bid 369 down. Now we're going to see where that turn comes in by using that brain. We took a couple hundred shares. 621.11 is a low, and we got in at 621.52. And there's a live entry right there. And basically we did that based on this being down here. And what we're going to be looking at is how that price action movement goes. Okay? And how that qualifier comes in. It's still a vulnerable low at this time on the Google entry, as using the brain to get down here, letting that 3 They slid this bar, half bar, three. They teenied down. So they went down. So here, 1 teenies, 2 teenies, 3 teenies, 4 teenies, 5 teenies, 6 teenies down, and that moved. And right now we're gonna see what kind of teeny up we get, and so we got in right there, and we're just gonna hold that. We're just gonna hold those 200 shares for a while, see if we get made at the bottom or not, and we will. If we don't get made, then we'll have to sell it, because the bid and ask is wide. 70, that's 29 pennies between the bid and ask. And what happens is in the execution is I sell on this side. That's where the entry is. That's how we got in to start with. So basically we want to see if this side of the market prints 92 pennies, not 79 prints, 87 prints. See how he slides that bid. And it's easy to slide it below there. This is how they put a run to try to get that bottom. So we failed right here at that teeny action line. Right here is where the failure was. And they slid that bid again. Here's how wide the bid and ask is. All right, people, we're going to talk about a bid prop on this bid and ask. He keeps sliding that bid down. That's what's stopping that thing from moving up off that bottom. That means the ask side over here needs to get over here and get in front of those bids and then start walking that stock up off of this bottom here now in this green bar. So this side of the print needs to get in front of this 621.40. The 71 is the prop. It needs to get in front of that 40-cent one in order for this to go higher. As far as the level 2 bid and ask, look how wide that is. 43 by 70, 43, 45, 71, 45. We're in at 52 pennies. There it is at 41, 45, 47, 50, 71. Watch there, selling 66 in the middle. There it is at 69 pennies. I said 71's got to get on this side of the market. You've got to see a bid prop 93. 71 pennies hasn't showed. 71 pennies above that bid. You're at 62. You need to see that 71 rise over on this side. Come on, you're seeing the 93s and 95s print. 76, that's almost a half teeny print right there in that bid in action. Say bid in action. Still got to see 71 pennies over here, folks, on the prop. There it is. 95 came in. That's a higher prop. Now let's buy up the ask. Watch those prints there. That's how you confirm that, understanding that level 2. This is direct to the market and where that bid and ask starts to contract. But watch those prints. He did a bid pop. He just did 38s. He did 42s right here. 42s popped up there and he popped it back down in that bid and that ask. Right here, bid and ask pop. Watch them bid pops. 37 buying up the ask. That's how you walk that name up off that bottom. This is how you're looking for it in the level 2 new MMTs. Slide that bid and ask. Here's that bid for the buyer, and there's the ask for the seller. Watch those prints at 49s crossing inside. You don't want to see that side selling? No, you don't want to see 49s. Now bid prop. You got to get a bid prop. You got to get a bid prop. Keep that thing going above north of 35. Right in on that action line. Let that bid prop 54, 43. It's printing wild. Look at that. That's a 32 penny drop in a bid in the ask. That's what you new MMTs are learning as a market maker, that without this platform, you could never go through that. And they got a bid pop. I got a bid pop. I got a bid pop. I got a prop shop at 71 pennies, 88. He comes in. Look at here. Now let's buy up this side of that print. Let's buy it up. Let's buy it up. Come on. You want the ask to get, yeah, you want that buyer to get his way. That's how, no, you don't want to be selling over there. Look at that, 59, 59. He slid that bid. He's sliding that bid in every which way right in there. New MMTs. This is why I want you to see this, because you can see how they slide that bid and how they walk the ask and how all of that confusion is all right in your platform. And you went up here, right here in the name, you can see that teeny failure. So you teenied right down to this teeny line now. And that's the wick on that teeny line with that bid and that ask there. And he's coming right back down in the other direction. So he tried to walk it. The market maker couldn't get anyone to follow.